get it. What up, everybody? So here's another class, man. The watch list of August 18th. Weekly watches of August 18th. Last week, the market just kept going up and up and up and up. So this week, we're gonna see what's coming next. Is it time to retrace, reverse, continue? I'm gonna speak about all of that. But first, I wanted to take us here to this order blocks quiz that I gave the community. So in various communities, I put out like a little order blocks quiz, to test people's knowledge on order blocks, because it's such a popular strategy. A lot of people want to know how to make money with the order block strategy, and that PD array or that POI or whatever you want to call it is very powerful. But the thing is, with the wrong teaching, you're gonna lose a lot of money. I'm telling you, so my goal is to make sure you don't have to necessarily learn from me, although I know it will greatly benefit you, but to just be careful who you're learning from, because you can learn what an order block is from the wrong person and you're gonna take a lot of losing plays. And one thing I've done with my mentees is I've helped us select all the best PD arrays in the market and knowing when to use them. So like, it's one thing to say, oh, this is an order block by definition. Why? Because, oh, it's this type of thing before impulse move and blah, 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 blah. I can name all the criteria for a good order block. But if you're using that very same order block in the wrong context, price is going to trade right through that thing. So it's not always about visually what a good order block is. It's about when you want to be using said order block. And that's the difference between like what we do versus what a lot of people do. Is a lot of people talk about things in hindsight, but at BTSMC, we pretty much become very known for talking about things before it happens. So it's not like I'm not just cherry picking examples out of a chart. It's like I'm telling y'all, yo, before it happens, price is gonna do this and gonna do that. And for months straight now, we've seen it deliver time and time again. And order blocks is one of the things that we talk about. So here, these were the results of the free community. People who haven't heard me really teach about order blocks yet, like that, you can see that the results weren't really looking too hot, right? It's below 50% was the average score. You can see that it's heavily heavily favored to the left side of the chart. Obviously a 20 is a perfect score. Nobody got a perfect score out of the free community, but there were a couple people that got 18, so shout out to y'all. Y'all know who y'all are. A couple people got a 16 out of 20. 6 people got a 14, but then the rest of everybody else just was 50% or lower. So first of all, if you're part of the 50% or lower group, don't feel bad, because that's literally the majority of people, which just shows you that there's not too many people who can recognize good order blocks, and that's okay. Like I always say, that's good news, because at the end of the day, that means there's more information to get. So I always feel like the worst thing is, imagine if you learned everything there is to know and you still are losing plays or you're still not profitable. That's when you should be scared. Like, dang, I know everything and I still can't make money from it. I think it's good news to know, like, oh, all right, I'm lacking information. So all I got to do is get the right information and then my life could change. So don't look at it. Everything is perspective. You feel what I'm saying? But this was the results for the free community. And then I had my mentees take the same quiz. And we're only 5 weeks in, so they got more to learn, to be honest. But you could see that they were favored to the right side of the screen. Had 4 people get a perfect score, for example, and then 4 people get that 18, which is just getting 1 wrong, for example. But most people only got 2 wrong. So I say majority of my members got 80% or better on the quiz. So that was okay. I still think they could have did better. And then 1 person got a 6, 1 person got a 4, which is once again okay, because we all working and we gonna get everybody to a 21 day. But I'm telling y'all, just literally information can just put you in a better situation. So as I say, I'm doing an order blocks masterclass, which is, if you're watching this on YouTube, the link is in the description. If you catch it in time, that class is on August 24th. That is Saturday, August 24th. So if you catch it in time, check the link out. It's in the description of this video. If you watching it right now live with me on Zoom, I'm gonna put a link in a second. And then just for people that's curious, the mentorship is going well so far. As you can see here, I had them rate their experience in mentorship thus far, and 17 people out of 23 people that answered say it's 5 stars, and then you had 6 people say it's 4 stars. I'm gonna get them to 5 soon. Them little 6 people we get challenge, but it's going well. That's an average of like maybe around 4.8 at this point. Stars out of 5. So everything is going well, and we're gonna keep it pushing. But yeah, Order Blocks Masterclass, big life-changing class coming up. So I want y'all to join that. But that's last week. I mean, that's not last week. That's Order Blocks. Now I want to talk to y'all about last week, gems we could pull from last week. Let me just pause the screen for a second so I can put this link in the chat, and then we're gonna talk about some gems from last week. So come on, computer. This ain't the time to freeze. All right, there we go. About to say, don't play with me. Don't play with me, computer. It's not the time. All right, so hopefully that comes up properly in the chat. If you were interested in that Audible Masterclass, it is in the chat right now. And all right. So save that, put it on the side, sign up for it after, because I want to really get into this. And as y'all know, I don't know if I said this on the recording or not, but I'm currently recording this in Jamaica. I'm on vacation, but I wanted to do a class for y'all real quick. So let's go to last week. Let's talk about last week. So last week we were looking at this SIBI to the left. I'm gonna draw it out right here. You see this area, this is a 4-hour fair value gap. And since this huge drop that happened, and this was like a famous drop because it made world news. Like every asset class was just selling off. Everybody's like, oh my gosh, like the world is ending. I knew it was a big deal when my mom's had hit me asking me about, like, is the stock market crashing? That's when I was like, all right, bet, like it's time to go long because everybody's eyes is on it. And so I was very suspect about a continuation. On the watch list, we had talked about price coming to this yellow line. So this was a good call, but it happened in one day. We had class the day that this happened. So if y'all remember, obviously our class is Sundays at like 6:30 p.m. Eastern. This sell-off happened on Sunday night. So everything we said happened all in that same night. And then after that, it was just like, all right, well, it hit the target. So what's up? What's happening next? So, we started naming targets to the upside we were looking for, and our destination to the upside was this 4-hour SIBI. This was the favorite destination I had. I've been vocal about it. I wanted price to get hit so bad because I felt that this is an area that if we're gonna be bearish, it could be bearish from here. So many different watch lists or different classes we come in here and we're talking about time periods where exactly what we wanted to happen happened. So although I like the accuracy and I like the precision, I like being like quote unquote right, I was waiting for, in a weird way, a moment where I could speak on a time where it's like what we projected didn't exactly happen, because then I could build lessons off of that, because I'm not really tied to always, like, I'm not gonna always be 100%. You know what I'm saying? So I'm cool with the times when I'm not, because there's something called making adjustments and knowing how to tell when you're wrong really early. And there was no money lost behind this either, by the way. And I'm gonna show you how not to lose money behind choosing a POI, which is a point of interest. So this 4-hour SIBI is an area where we are looking to see if the market wants to reverse back to the downside from. We're looking to see if the market wants to do that. Doesn't mean as soon as it touches it, oh, I'm going short, I'm in puts. Don't do that. You ain't get no confirmation. So it's looking at that. So you're waiting for the 4-hour to come to this 4-hour area. Now, when we're about to hit the area, or when we touch the area, what time frame do you want to look at? Now, I've been giving y'all the confirmation time frames over time. I actually released it on my Instagram in one of my reels. And if you're watching this on YouTube, my Instagram is in the link in the description. My Instagram link is in the description. So we use the 15-minute time frame to give you confirmation that the 4-hour point of interest is a valid point of interest. So let's go to the 15 at the time that we come to this area. That is I'm not gonna get into that right now. I'm gonna stay focused real quick, right? So look, and I'm talking about what was in the chat. So look, so for the 15 minute chart is what we're looking at when we get to this 4-hour area. So what are we looking for exactly in this 15? Now, I'm not somebody that does like market structure for real. I don't really care about changing characters and breaking structures. So I know some people say, hey, when you see a change of character, go the other way. Like, I'm not really checking for that. I'm really somebody that a lot of what I do is based on fair value gaps, because fair value gaps are pretty much the most important thing in the market for different reasons. It's not just for taking calls, puts, buys, sells. It's not just for that. Fair value gaps also tell you a lot about sentiment, direction, market mood, right? The mood of the market, everything. It's so informational when you really learn fair value gaps on a deeper level. And so that's what I use also to help me validate which POIs I like. So I use the 15-minute fair value gaps to tell me a lot about the 4-hour ISO word. So first of all, one thing I'm looking for is not just 15-minute bearish fair value gaps. I'm looking for 15-minute bearish fair value gaps that get respected or don't even get traded back to. Like, I swear, like, the most picture perfect thing you want to see is when price gets to your point of interest and it creates a fair value gap that never gets traded back to. Like, it makes it and it just keeps dropping. So for example, you see this one right here that I just pointed to, you would have wanted to see this occur and then right after, like, another one occur, and we just keep dropping. And this one at the top, never would get traded back to. We love that. That is a sign that, like, oh yeah, it's about to really, the market's about to drop off heavy. And in the opposite example, you could say the market's about to rally really heavy, typically. All right, so first and foremost, the first bad sign was the fact that this fair value gap got traded back to. But that doesn't mean it's dead. Sometimes it does trade back to it and then we keep dropping. So what do we want to see? We talk about price coming into it and shortly after making another fair value gap. Those are really good signs. All right. Now here's the issue. I wanted to speak about this so bad. Like, there's something that I harp on, and in smart money we talk about time and price. Now you could have a picture perfect setup, but if the time doesn't make sense for that setup to play out, you shouldn't be taking that setup. And so time is not just saying, hey, take trades at 10 a.m. Hey, take trades at 2 p.m. Take trades at 3 a.m. Those popular times where you can expect to see, some aggressive movements in the market. But time is also about news events. What news events are surrounding your price action? Because if there's no news in the market, sometimes the market is just about to enter a range, and so you're looking to take fair value, guys, but it's not really about to play out for real because it's not time for that move to happen. So that's, once again, either news events or literally AM PM type time slots. So in this case, when is this fair value gap happening? This is 10 p.m. on a Tuesday. That's not a time. Personally, I don't trade those times, and also it's just very rare that we start a major reversal like that at that time. So yeah, a bearish fair value gap finally formed in price action inside of our overall area, and you may think, oh, it's time to go short, but you got to be careful because time is not aligning with your setup. So I wouldn't even trust this one in the first place, and you can see that although it may have caused slight drops, price ended up coming back up. All right, now let's look at the next bearish fair value gap we got in this time period. And once again, the point of this is to show you how to know when you're either wrong early or how to actually confirm your plays. So I don't go too fast. What do we establish with the first fair value gap? We established that time and price is extremely important. Don't just think, oh, we're in the POI, so let's take it. Look at the time you're taking it, because that may end up making you take a losing play because you're just too eager. The market's not ready yet. So that's the first thing I want to establish: time and price. So we don't like this one because of time and price. I also shared with you that we don't really like when the very first one gets traded back to. So you see that this one got traded back to pretty much immediately. Wasn't the best sign for you. All right, so boom, that's that one. Now the second one that came in price action is this 931. This is so small, so that's already suspect. The fact that it's so small as the starting one. Usually the starting one is not that small, but cool, whatever. That's whatever, right? I want you to look at the nature of the drop. So let's look at the nature of that drop. You have to go down to a lower time frame to see this too. So look at the nature of that drop from 930, because 930, oh yeah, you could start a reversal at 930. I'm not mad about that time. So time and price is actually here now. You need to actually look at the price side. Time is here. You need to look at the price side. So let's look at the price side. So the nature of this drop is very wicky. It's very choppy. It's very suspect. And whenever I told y'all, whenever price is moving like this, where it's very pretty much a choppy move down, a very stubborn move down, you should have your eyes open for a rally. All right, whenever look at the 2-minute time frame. We barely making any fair value gaps in this drop. And then, we got one right there. But then look how we took all of that back. So even though you got that fair value gap from the 15-minute initially, the nature of the drop could have told you that, yo, this ain't ready yet. If anything, we're just still ranging for real. All right, now boom. Price comes and it runs these lows. Let me highlight it. See these lows? I bet we ran these lows. So if we were truly bearish, we're gonna accelerate past those lows. Like, we're not gonna pretty much run the low and consolidate, because then that's more so signs that we may sweep. So now, boom, and this is a play that we ended up catching this whole upside. So now we catch the sweep. And why did we even catch a sweep in the first place? Because I told you, when price is dropping like this, I'm waiting for signs that we're gonna trade back to upside to take this whole area back. So you see that's what happened. This is a very beautiful run back. Now, same thing. Boom. You see these highs. What we doing? What we doing? And y'all seen in the community, because I put this one in the free community. Y'all seen me enter my play up here, literally right here. Like literally right here was my entry on this downside. Why? Because I'm anticipating the same thing. I'm anticipating this being a sweep because I'm pretty much looking at the fact that that fact that we're in a range, like we're ranging. So I don't really expect much. Oh, and this was CPI day, by the way. This was CPI day. But why did I target? I'm gonna show you what my target was. Why did I target this bullish fair value gap instead of thinking that we're about to go to the lows? The reason why I targeted this bullish fair value gap right here, this is why I took profits at, instead of thinking we're about to run sell side liquidity, which means the actual lows. Why did I think we were gonna stop right there instead of the lows? Because, and this is the thing you need to put in your nose, right? If you peep that, we already swept sell side, especially from a time frame like a 15-minute, mind you. We already swept sell side. We came up and we swept buy side. I gotta remember there's different people in here, my fault. So sell side means like a swing low, for example. We swept a swing low, we came up and we swept a swing high. And then we came back and we're just literally smack in the middle of that area. Chances are we're gonna stay right here for the rest of the day. All right, so based on that knowledge, I'm like, okay, so we swept this side and we swept this side. No one wins when the family feuds. Ain't nobody winning. Bears is not winning, Bulls are not winning. At that point, for me to expect, and remember, this is now becoming the PM session, meaning like the afternoon session. For me to expect price to now drop off aggressively and do this is just very unlikely. Like if price was gonna drop, bro, it would have dropped on the initial drop this morning. This would have been the one. And if price was going to rally, if price was wanting to rally today, it would have rallied here. So seeing it sweep twice in a row, like boom, that's it. So this drop, I targeted the discount BTSMC, which is just the BTSMC on the lower side of this price leg. That's why I targeted this one and I got out. And thank God I did, because anybody who traded this day saw the rest of the day looked just like this. The rest of the day was straight chop. You know what I mean? So got out and ranged for the rest of the day. So that's for one. But now, so this fair value gap from the 15-minute, based on the condition of the market, based on the lack of energy on the downside, based on the fact that we swept this just to come back up. You think I'm about to go short right here? Hold on. Don't tell me you think I'm about to go short right there. Come on now. We would never do that. Like, don't do that. So that's what I'm trying to say. You never really got confirmation out of the 4-hour. The time and price one, bad fair value gap to trust. This one, bad fair value gap to trust. Why? Because of context. And when y'all hear me say context, this is what I'm referring to. It's like there's nuance with these things. Like you can't just, it's not always so cookie cutter. It comes from either one, experience, two, learning from somebody that can tell you the different types of conditions to watch out for. So that's why I don't just show y'all just examples of, hey guys, look at a fair value gap that worked out. Like, nah, it's very situational. And you, over time, you become really good at using these things and knowing what to watch out for. So like I said, you would never look to go short in this fair value gap, not with the context of we're coming off of a sweep like this and the way down was so choppy. So if the way down looked like this, people, the way down looked like this, trust me, this rally is going to take the entire section. Not some of it, is going to take the entire section. So at this point, I'm targeting the highs. You feel me? And based on price being in the range, I expected a sweep. So I took my shot on the sweep once I got confirmation. My confirmation came from the 15-second or the 1 minute. That's what I typically enter on. I got my confirmation for a sweep. And that's why y'all saw me enter right up here. And then I was able to catch this move down. This is like over 100 points. You know what I'm saying? On the NASDAQ, which is solid. You don't have to always aim for liquidity down there. Sometimes you could just aim for a fair value gap. That's good. That's a fine target. And that's what I did there in that case. So that's that. So once again, you never got no confirmation for downside. And then when we come back up, we still on the 15-second. My computer just lagging a little bit. But if you could kind of see, we never got confirmation. Never got confirmation for downside. And so then the market rallies after that. So whatever trade I did, if my computer can stop lagging, you'll see what I'm saying. Whatever trade I did that you had regarding the 4-hour fair value gap being something that's going to send price back to the downside, if you don't get confirmation, there's no need to lose money on it. There's no need to lose money on it. And so this is what ended up happening in that section. You see, we pretty much just ended up trading to the upside through that gray area. So it's out. Trade I did invalidated. Bet. Shift focus. If we not gonna reject this area specifically, really, as I said at the time, really looking at the lower half of this. I didn't want price coming to the upper half. I really was looking at the lower half of this. So when I see we didn't reject the lower half, boom, automatically we go into this red area up here. Automatically, like it's an if-then statement. If not the lower half of this, then this red area. And so that's what price got. Now this red area has a chance to send price back to the downside. Do I think it will? No. And my reason for not thinking it will is based on price respecting this bullish fair value gap from the 4-hour. So in the morning on Friday, I told y'all everything is going to depend on this blue area. And why do I say that? That's because we got to a destination. This destination is technically a bearish destination. We could reject here. It's not a supply zone. I don't do supply and demand. But if you want to view it as a supply zone, then feel free to do that. So just look at it as an area where price can technically reject from. So we're now in between bearish sentiment and bullish sentiment. So what's going to happen? You're pretty much at war. You could just wait and see if you want to, and that's okay. You don't have to be eager and just like choose a side, let price confirm for you. So as I told y'all on Friday, I'm only getting like more on the bearish side if we lose this 4-hour bullish fair value gap. And you can see that price obviously respected it. If you could see the let's say the 15 minute after we came in this area, ultimately it just ended up going bullish. And we pretty much, I mean, we're definitely in a range right now, but we're obviously traded back to the upside. We're almost at the previous highs, which we'll probably get there. And then, you know, it's price is kind of telling you that it's bullish there. So, you know, it's like last week's lessons. I hope y'all got something out of that, where, you know, we're kind of looking at, all right, you had a trade idea. Now, you know, what do you want to do with that trade idea? Like, are you just going to go short as soon as it gets there, or do you want to wait for confirmation? And that's why I always lean on the side of waiting for confirmation, because it really prevents a lot of losses. Like, there's just a certain manner that price moves in when it's using a point of interest or a PD array, however you want to look at it. Like when price is bullish, it's gonna do certain things. When price is bearish, it's gonna do certain things. Like, it just always, or 99% of the time, is gonna deliver in that manner. And so you can base your strategies around that. If I'm not seeing what I want to see inside of the POI, I'm not gonna take the POI. And like, I'm trying to pause this so you can at least hear that sentence. If you don't see what you need to see inside the POI, why are you taking a play based on it? Just cause, like, cause you had a trade idea? Like, don't do that. All right, so hopefully that's helpful for y'all. Now let's talk about this upcoming week. That was last week. Let's talk about this upcoming week. And once again, I gotta kind of fly through this because I don't have that much time, being I'm on vacation right now. So let's go here to the economic calendar. That's what we usually start with. And so Monday, you have a Fed speaker. Not really nothing to talk about. We're also kind of somewhat in a range right now. I don't have that great of expectations for Monday. Same thing with Tuesday. But Wednesday, you have the 2 p.m. FOMC minutes. Now, please don't be the person that makes a mistake to think that the minutes means that they're, you know, it's Jerome Powell speaking. No, it's just, they're just releasing a document that's summarizing what they covered last time Jerome Powell was speaking. So you don't really want to, it's not the craziest news event, but I would say to be careful if you're trading at the time of the news release. There could be a big flash candle that can just destroy your account. So be careful. I don't really think you should have active trades open at like 1:59 p.m. because be careful. All right, that's Eastern time. So make sure y'all watch out for that. Now, Thursday, initial jobs claims is starting to become more of a relevant event because there is still some suspicion that we may be heading into a recession. So you still want to watch out for that 8:30 news on Thursday. PMI, look out for it. Another important news event in this time period. But Friday, I think, is the biggest event this week. We got Jerome Powell speaking at Jackson Hole. I don't know if you remember Jackson Hole from 2022. That sold the market off so hard, bro. That was a crazy sell-off. I don't know if y'all remember that from 2022 when he spoke at Jackson Hole. But you know, we're gonna see how it goes this year. I'm not expecting like a crazy event per se, but the market will move based on what he's saying, especially as we're wondering like, yo, bro, are you cutting rates in September or not? Like, what is really going on? And I think he'll bring some clarity to that on Friday. So the market is pretty much gonna be waiting for Jerome Powell to speak on Friday, I feel. And so I would be careful of, you know, the price action this for the majority of this week. And it's also August. And if y'all don't know, August is technically historically the worst month to trade. So if you're noticing prices kind of rangy, prices moving slowly, understand that the daily volume on these indices is significantly lower than it is in other months. Significantly lower. Like August, everybody on vacation. Like I'm on vacation doing the freaking watch list right now. So everybody on vacation this month. So be very careful trading in August. I really want you to be careful. All right, now let's go. Let's get into this. So with the expectation there, let's now talk about some tickers. So first I'm gonna go to the dollar, as we use the dollar for sentiment. And this was last week's analysis on the dollar. We wanted to see, you know, I don't never erase the arrows. We wanted to see price come to the SIBI. Notice where I made the arrow stop. I was trying to stop it at the halfway mark. We're looking for price to come right around here to trade back to the downside. So it's playing out so far. We'll see if it has energy to continue. We also said we wanted to see a fair value gap form after touching the blue area. That was something we really wanted to see, and price was able to do that for us, and it was technically respected. I don't like how high the green candle traded into it, but it did what it had to do. Either way, we still are dropping off, and I'm looking for some continuation down. Now, if DXY is trading down in this time period, DXY trading down should mean that the Nasdaq has an expectation to potentially trade down a little bit. All right. That's what it's been like over the past few weeks, as there's fears on a US-led recession. If it was a global recession, we may have the Nasdaq and the dollar moving opposite, but because it's more of a US-based recessionary fear, then they're gonna move pretty much in the same direction. Nasdaq going down, the dollar's going down, but typically the dollar moves first. All right, so for example, you know, would I even get into that? I mean, we just look. You can see this day. Y'all seen how this was the big drop that everybody was talking about? Like, was that early last week, whatever, or was it a couple weeks ago? You see the dollar was moving super down, just like the Nasdaq died that day. Those couple of days, the Nasdaq died, so did the dollar. So they're moving in the same direction in this time period. So we're gonna keep our eye on that. We'll see if they want to keep dropping. That's that. I'm not even getting a 2-year right now. I'm gonna keep it at the dollar. Let's go to a few forex tickers, and then we're gonna move on back to like futures, Nasdaq, S&P, and stuff. But I know I have some forex traders in here, so I like to talk to them a little bit. So here's a like small forex section that I give. And on Euro JPY, we're still watching this SIBI. This is a very important fair value. You got to see if we want to come back to the downside. So we're still eyeing this. You want to see price come out of this. I would only really like start to believe in this or get involved in this if I'm seeing like bearish fair value has come out on this daily time frame, or even on the 4-hour for real. So like if you see the 4-hour, the drop so far is not really convincing. I kind of want to see it get aggressive, especially if we could come under these lows right here with 4-hour bearish fair value gaps. Then I would be like, okay, it's starting to get convincing, because you see the journey up was already choppy. And so I already told y'all, when price moves like that, I'm never surprised to see like an aggressive drop to take this whole area back. And so if we could get the 4-hour on Euro JPY to pretty much end up moving in that manner, bearish fair value gaps to the downside, then you know you could start looking at aiming for these lows. And if we come to these lows, then we'll most likely come to that 153.194 target. And so we'll see what's up. But if you don't get confirmation, there's no need to go short, and then you end up just looking at bullish targets. So if we're not using this, then I would start looking at price coming to these highs right here. You know what I mean? So it's if then statement is like, if not this, then I'm looking up here. So money we made regardless, and you're just gonna trade what the lower time frames will tell you to trade. If you're not getting confirmation and you're getting confirmation in one direction, ride that direction to the upside targets. That's how it's always gonna be. and Euro USD did exactly what we wanted to last week. Now, really, the past few weeks we've been looking at it to not only use this weekly BTSMC, but then when it came up, we talked about price using this fair value gap, not just using it, but creating another one that we wanted it to use, and it's been playing out pretty well. So Euro USD is looking good. I mean, if we're continuing that bullish sentiment, then being that this is the next target, I would just simply aim for these highs up here. You could take the highest body at the swing point, right? The highest body at the swing point, which would be somewhere around here. And if not, then you could just take the top of the wick. But either way, it's something to aim for if we're going to continue to the upside like this on Euro USD. All right. Now, if price like closes under this red low from Thursday, then I might be looking for price to come back down deeper into this range down in here. All right, so I kind of want price needs to pretty much stay on the upside here for me to like remain bullish towards these upside targets. But be careful. There's, I'm telling y'all, there's no real significant news events this week. So what I actually really expect out of Forex tickers that are dollar pairs is some chop, because I wouldn't be surprised to see the dollar chop, and the dollar is gonna chop, then it's likely that dollar pairs are gonna chop as well. So just be careful. I feel like Jerome Powell speaking on Friday is the only thing that can really make the dollar move aggressively. So this whole week I would be careful as a Forex trader. British pound, you see the bodies held this weekly BTSMC we were looking at. Beautiful. We literally came, we were talking about this BTSMC. We wanted price to use this BTSMC to take us to these highs. And so I still have the expectation. I think we're gonna still push up some more on this ticker. So I just want to see bullishness, and we could aim for these highs up here as a simple low-hanging fruit target. So British pound looking good. USD CAD, yo, if y'all took the sweep I did, I talked about that day, y'all making money, because we literally talked about price to use it. We targeted this yellow line, and I said I think it's just gonna use this yellow line as a sweep area. We swept it, and ever since then we've been dropping and dropping and dropping, and I'm still expecting continuation towards the downside to aim at these lows. So USD CAD playing out so far, and USD CHF, another fair value gap that is very important for price. We want to see if price can continue to respect this. I like what it did last week. I like this. Now, if this week we could just trade a little bit up into this wick like how we're doing, and then drop off right after, like if the candle that you see forming right now could flip red, we would love that. All right, we would love that. And if we make it past this wick, then it's very likely that we're going to come to this yellow line. All right, so, but the first thing I would do is I would aim for the halfway point of this weekly wick. So right now, if we could flip red, I'll aim for the halfway point of this weekly wick. If we make it past that, then I would aim for pretty much this yellow line after that. And last but not least on Forex is, literally the same situation, and the exact same thing I just said is my exact analysis for USD JPY. Same fair value gap, same delivery. All right, so that's pretty much what it is for that. Now, let's go. Actually, let me just say Bitcoin. Oh my gosh, please, y'all. Yo, this weekly bullish fair value gap on Bitcoin, for months, I'm not exaggerating when I say for months, we've been looking at this, and it's just an if-then statement. If we continue to hold this, I am bullish on Bitcoin. I got these targets up here, 95,000. I got 122,000. Those are two bullish targets. Now, if we don't hold this weekly bullish fair value gap, then I'm aiming for, I think Bitcoin's coming to the low 30s, and there's no in between to me. But for Bitcoin, remember, not for Bitcoin, for fair value gaps rather, remember that we need bodies to hold the fair value gap for it to be valid. So I know, what is it? I guess the week of August 5th, right? You've seen price come all the way down here. But guess what? Look where the bodies closed at. Look how the bodies came all the way back up in here, held the fair value gap. You see where the bodies are, and that's over. As long as the bodies hold the fair value gap, the fair value gap is valid. And so I can't be bearish on Bitcoin for real until it loses this area. I thought it lost it at this time. I was like, there's no way Bitcoin gonna trade back up before the end of the week. And looks like they ended up doing that week, right? This red candle was a Monday. Tuesday, Wednesday, you see Thursday was super bullish. Thursday was up like 12%. And so they ended up closing higher. What can I say? Bitcoin closed higher. It's still holding it. So for crypto traders, we're obviously ranging on Bitcoin on a weekly range, on a monthly range. So you have to be careful. But I would just say wait for confirmation for either direction. And Ethereum did the same thing. I told y'all that, like, I'm telling y'all, bro, this stuff is not a coincidence. Like, I said the same thing for Ethereum. It's the same exact weekly bullish fair value gap. Look where the bodies ended up. Look how price came all the way down here, bro. All the way down here. But look where it closed that week. Inside of the fair value gap. It's still valid. As long, like, this is what I'm talking about. It's bodies, not wicks. So as long as the bodies is holding this, I can't be bearish on either of these tickers. And so we'll see what happens with crypto, but just be careful trading this range. I know Ethereum came out of it. We could watch to see if Ethereum wants to use this weekly bearish fair value gap, the lower half of it specifically, and use that to trade back lower. Like, maybe that's what's occurring right now as we speak. You see that price just tapped into it. We'll watch out for that, but once again, just wait for confirmation, and then we'll start getting on downside targets and all of that. But that's all I wanted to say on crypto. So now coming back to the Nas, man, Nas. Wow. Okay, so we engineered lows down here, which means we just made everyone view this as a support level. We got equal lows. Cool. That is liquidity. But here's the thing about trading liquidity, and I see this often, even for the chart debate I posted. I had somebody in my DMs, for example, say, oh, I think, we got sell side liquidity below, so I'm picking option 3 because we about to run liquidity. And I'm like, but bro, you realize that there's liquidity on the buy side as well. There's liquidity all over the market. So who's to say we're gonna go for this liquidity when we got this liquidity over here? Like, and that skill set of knowing which liquidity we're going for at any given time is what separates smart money traders, to know which liquidity is being traded for. And how do you know that? For people that have that question, who's like, yo, man, I learned about liquidity, but now I don't know which one we going for. Cause like, yo, back to there's liquidity right here, there's liquidity right there, bro, there's liquidity right there, there's liquidity on the downside. So how do I know which one you're going for? You gotta pay attention to the nature of the move or your price leg. So for example, this was a very choppy and ugly start at first, but then when you start to see, so then my fault. So at this time, I'm okay with you thinking that we're gonna reject to come back to run this yellow line. That's okay. But guess what? You have those confirmation time frames we talked about. So you'll know if you should actually take those shorts or not based on getting confirmation. But if you don't get confirmation, you shouldn't take those shorts in the first place. Now, with that being said, now look at the daily. If you look at the daily now, we got a bullish fair value gap right here. If you look at the daily now, we got another bullish fair value gap that we just formed right here. We just made 2 in a row while simultaneously disrespecting this bearish fair value gap. Y'all peep this? Come on now. We disrespected as a bearish fair value gap and a VI overlap. We disrespected that, but we maintained, or we created really, bullish fair value gap. So when you see that, I wouldn't be worried about sell side liquidity for real. And I would start really saying, okay, price is targeting buy side liquidity. And so I'm looking for bullish things on this price leg that we're currently creating that can keep us propelled up until we go and run some buy side liquidity. Understand? So remember, there's liquidity on both sides, but the nature of your price leg will tell you what price is trading for. You're looking for not just fair value gaps on your price leg. You're looking to see, are we respecting bullish order blocks? Are we disrespecting bearish order blocks? Are we disrespecting bearish fair value gaps? Because then price is screaming at you what price's real intention is. It's screaming at you, and that helps you get direction. And so when now you look for upside targets, like, okay, well, if it's not rejecting here, then I mean, it's coming up here next, which is what I told you earlier in the watch. Like, I knew if we didn't reject the lower half of that 4-hour fair value gap, I'm like, well, we're coming to this red area. I know that much. We could technically reject it, but I don't know. I would only take that with a lot of confirmation. I lean towards us pushing up higher. And if we push past this red area, then I'm aiming for price to come to 19,883 next as a next objective, 19,883, and ultimately higher after that. Especially if we have energy, I would aim for this fair value gap. Now, do I think that when we get here we're gonna reject? No. My fault. What I mean by reject is, I mean like this. I'm gonna draw it. Do I have that expectation? Absolutely not. Could this happen? Yes. This could happen. All right. So that's why I would more so target that, because I know we could get a reaction from it. Do I think it's going to send us to new lows? Absolutely not. I just think it'll cause a baby retracement before we end up running all time high. All right, so that's what I'm pretty much saying with that fair value gap. So just as an upside target, I might just target that as long as the price leg continues to hold bullish PD arrays. And by continuing to hold bullish PD arrays, what I mean is, for example, let's look at what's been happening. Look how this retracement, what do we bounce off of? A 4-hour bullish fair value gap. Bet. Okay. So price is talking to you. It's respecting bullish PD arrays. Let's keep going. We pushing. Oh, retracement. What the price bounce off of? This 4-hour bullish fair value gap, and we're still pushing. All right. So this is what I mean by as long as it's continuing to respect these things, I can't possibly be bearish. So seeing it respect this is like, all right, well, I'm still looking for price to come to the yellow line. So any retracement, I'm asking myself, what are we retracing for? If when we turn around, I notice, oh wow, there's a nice order block that I like. Guess what I'm gonna do? I'm gonna take plays based on this order block, and then I'm gonna go long here and aim for the yellow line. I'm not calling this red candle order block, by the way. I'm speaking hypothetically, so I need you to follow me. All right, I need you to follow me. I'm speaking hypothetically. If price came up here, retraced, this could be an order block here, for example, that you could go long on because you expect it to target this yellow line. You feel what I'm saying? And so that's how we trade. And guess what? When it gets to this order block, do you just take it right away? You could. If you like your risk to reward, you could. That's just not how I trade personally. I can only tell y'all about me. I'm still gonna do the confirmation thing. So if this happened to be an hourly order block, we confirm hourly POIs with the 5-minute. So I'm gonna look for the 5-minute to give me the reactions I need to see. My play is gonna be based on the 5-minute confirmation. I'm still gonna enter based on the 1 minute and the 15-second, but that's getting a little too intricate. I think one day I'm gonna elaborate a little bit more on how we could scale all the way down to your true entry, you know. But just for time purposes, I can't go there with you right now. But I definitely feel like people are gonna need to hear that, to where like, how do I take a 4-hour area and still enter my play based on a 15-second confirmation? I feel like I need to like really break that down, just not today. But and why do I do that, by the way? Because then at the end of the day, bro, my risk to reward be so lavish. Y'all don't understand, like the risk to reward be very much favorable, because my play is still gonna be based on a 15-second entry or a 1-minute entry. Either one depends on what I see, what I like. But my target is still a 4-hour target. It's lavish, and my losses are gonna be based on these baby little areas, so I don't really care, you know what I mean? But that's why I'm saying you can't just use the 15-second just anywhere. People might think that I'm just trading the 15-second or 30-second or the 1 minute anywhere on the chart. Like, nah, it's gonna be based on the stuff we're talking about. So for example, you see how like 4-hour area, how I am like low-key explaining it a little bit as the most brief explanation. It's like, you see how we're coming out of a 4-hour area, and then I'm gonna use like the 15-minute to confirm it. All right, 15 minutes confirming it. That means that I'm looking at 15-minute bullish fair value gaps. And I would try to see if, I feel like I'm about to go over people's head right now, but I'm gonna do this anyways. I'm sorry if I confuse you. So if the 15-minute is making a bullish fair value gap, right? Then I try to get in before the fair value gap is fully created. How do I do that? So if I have an expansion candle such as this one, for example, I would have an expectation. I'm speaking hypothetically real quick. Please follow me, because I'm speaking hypothetically. I would try to see like, yo, inside of this candle, I'm gonna investigate this. Like, what does the 5-minute look like? What did the 5-minute just do? Okay, I see this. Well, typically in this scenario, we're not expected to come back to these two red candles. So to be honest, if price did come back down here, I wouldn't want to be a part of this play anyways. So at this point, I'm really just investigating this part of the 5-minute, right? And so I'm looking deeper into that. What does this look like? I'm going to the 1. I'm like, all right, bet. Oh, there's a 1-minute fair value gap right here. All right, cool. Bet. So I'm cool with price coming here, but I don't want it coming below this gray area. So I might base a play based on like, if price, let's say price move backwards or something like that, I'm gonna get in right here on this 1-minute fair value gap. But then I'm like, this area is like, let's see, 602 to, all right, well, this is 5 points. I might just go ahead and take it because it's 5 points, but you realize that I could like low-key do the same thing all over again, where as price enters this 1 minute area, I could go down to the 15-second. And now that I'm on the 15-second, I could look for the same thing. As the 15-second hits this area, what is it gonna do? What is it gonna do? Matter of fact, let me talk about before it hits it. On the way to that area, the 15-second is looking like this, ain't it? On the way to that area, so it's bearish. What do you think the 15 seconds is gonna do once it hits the 1 minute fair value gap? It's gonna start making 15-second bullish fair value gap. So what do you think my play is based on? I'm entering here, and my play is based on this fair value gap that we just created on a 15-second. And as long as price is respecting this, I'm gonna stay in the play. Usually, it doesn't even revisit this. That's the best part. But if it does, it gotta respect it. If it doesn't, cool. Oh my gosh, I lost 2 points. But yo, when it play out, it's gonna end up looking like this is the beginning of the 15-minute candle. The next 15-minute candle is the beginning of the next 15-minute candle. So I'm gonna catch this impulse move over these highs, and I'm looking for continuation to where? The 15-minute highs, which is really leading me to where? The 4-hour highs. And so on and so forth. But it's based on a 3-point stop loss. Is that? But I know I just lost mad people. That was my most vague way of explaining that. And I'm sorry if it sounds like a lot. I promise you it's a lot easier than it sounds. I promise you it's a lot easier than it sounds. It just takes background knowledge, and it takes like scaling into the lessons. I wouldn't teach, for example, my mentorship, I wouldn't even teach it on day one. It's like I teach them certain things first. So by the time you understand the entry and how we could get those type of entries, it's like, oh, I mean, I get it, because it's like I'm basically telling y'all stuff that's on the final exam before you even took the first class. You feel what I'm saying? We didn't even do that in school, so why would you expect trading to work out like that? And Janae said she did that last week when I mentioned it. Fire, way to execute. I love that. I love to hear the execution story. So that's amazing. Yeah, and that's how you really get the best risk to reward. But so that's NAS. We'll see how it plays off of the 4-hour bullish fair value gap. We'll talk it up there. ES is really the same analysis for real. It's pretty much doing the same thing. Pretty much doing the same thing. I appreciate you, Will. Appreciate you, for real. And thank you for everything you do in the chat, man. You've been amazing part of the community. But so yeah, so here we have I know a person with the same name as you, Janae. That's how I could pronounce it like that. Same exact spelling and everything. That's actually one of my good friends. Janae, if you're watching this, shout out to you. Even though I know you're not watching it, she don't trade. But yeah, so this is the same analysis, y'all. Literally same analysis. I have nothing else to say about ES that I haven't said about NASDAQ. You can see it did the exact same thing. 4-hour bullish fair value gap. They actually ran the highs. So that was another thing I noticed, by the way. I meant to say this, that notice that off of this 4-hour bullish fair value gap, you've seen that ES ran highs, but NASDAQ did not run highs. It might do it now, but especially when I was making this watch list on Friday, before I actually ended up taking the flight, you see they didn't run highs. So that's a divergence. You always want to watch out for that. But seeing that NASDAQ is pushing up, it looks like ES was probably the correct one. It wasn't like a little fake out. I think price was just stronger on ES on Friday. Here we go. So for the Dow Jones, this is why we aim for the lowest body target. Because this was the low on the watch list that day. I said the Dow Jones, let's keep it simple. Low hanging fruit objective is to target the lowest body at this swing point. And thank God, because if you were trading the Dow and you actually listened, you would have taken profits at the yellow line, and that was the freaking low. After this huge drop, the low was right there, and thank God. And this is why we just talk about low hanging fruit objectives, because ever since then it's been up and stuck, bro. Up and stuck on the Dow, and I'm expecting continuation for real. It really could do the same thing. You could look for lowest body here. Let me say one thing about the NASDAQ, but it's gonna apply. I'm sorry for being all over the place, but it's gonna apply to the SP 500 as well as the Dow Jones. So I'm gonna just tell you through the NASDAQ. Yeah, I see. I can erase this now too. We don't need that. We don't need this. We need this. We need this. I hate messy charts, bro. I hate messy charts. Only thing I'm worried about is our reaction out of this. I I have this as a target, all-time highs as a target, and that's all I need on my chart for now, besides what I'm about to put there for you. So look, if we get a retracement into this daily fair value gap, this really needs to be respected, like sensitively too. Like, we want to see price hold the upper half of this. I don't really want price even come to the lower half of this for real, although it can happen, but you really want to see price respect the upper half of this if we're going to be bullish. All right, so if I start to see, if price comes down, let's say today's candle that just opened up, you know, half hour ago, if it flips red and price comes down here, you don't want to see it come too low and like come down here. That's really not a good sign for real. If it comes down and it still respects this bodies, if bodies still respect the upper half of this, that's good signs that we could continue to the upside. It'll be just the first daily retracement we got for real, so that's fine. But you don't really want to come in lower. If price makes it down to this fair value gap on a daily, if it makes it to this one, I would not be bullish here. I would not be bullish here. I would actually think that we're gonna make a run on these lows. And so a lot of the bullish sentiment for me on a NASDAQ exists with price. Let me do this. This is the daily view. We know we want to hold the upper half. Let's see what it looks like on the 4. All right, so on the 4 hour, you know, the way that would have to play out is, let's say we stay in a range a little bit, we could probably sweep these lows, come into this fair value gap, sweep these lows and still respect it. So we're respecting the upper half of the daily. We're respecting this fair value gap on the 4. We're really just sweeping lows before moving higher. All that stuff is good to do. We're fine with doing all of that, but like, I'm really only looking at from here and above to stay bullish on. Once we start coming below here and everything, I wouldn't really like that. Does that mean I'm bearish? No, not necessarily, but I wouldn't be bullish. I'd tell you that. So be careful of that, and that applies to the S&P. I think it has the same, pretty sure I had the same fair value gap. Yep, same one right there. And same thing I'm looking at on the Dow Jones. I would like to see price respect this one to move higher for real. All right. And I guess reasoning why is, as price attempts to take this swing high right here, you don't want to see, it's good to give the whys, right? I don't want to just say stuff. You don't want to see price make this deep retracement here just to go up here. And like, so when price is on a mission, like how it is, especially how it's getting energetic towards the end of this price leg, you want it to remain energetic. So you're looking at the closest PD arrays to it to allow price to maintain that bullish sentiment, to run these highs and everything. Okay, so that's the reason why I'm looking at this, and it's the same logic when it comes to like deeper retracements. If I have a fair value gap here, I don't want to come deeply into it to rally. If price is truly bullish, you would want it to pretty much be sensitive here. Body's holding that to continue higher. All right, now if we just literally rally, enough said. If we don't even tap into this, price is super screaming at you like, bro, we are bullish, bro. Like, so if it don't even get revisited, even better for the bulls that's in the room, even better. All right, now boom, let's come to this. Here on the Russell, we've been watching this. Well, this is a weekly bearish fair value gap, but also it's a daily one. It's just really big on the daily. So for me, I was really only short on this if we could really reject like the halfway and below. We're a little too high in this for me to like be bearish. Am I bullish though? No, I'm not bullish on the Russell. I think the Russell is in a tough spot, because if I was trading this on the 5-minute time frame, the hourly, the 15-minute, the 1 minute, let me tell you how this typically plays out, and maybe you guys can relate. So peep this. And price is fractal, so whatever I say on the daily time frame applies to every other time frame. So look, y'all ever peep when we have consolidation like this, and this whole area I told y'all to stay away from the Russell? And then y'all may remember when I told y'all, when we were breaking out, I told y'all aim for this yellow line. This is the target. The yellow line was the high. And then when it hit it, I say, yo, look at this fair value gap, because I think this fair value gap could take us higher. Do y'all remember that? We used this fair value gap. It took us to the highs when we didn't accelerate, and then we were pushing down. Do y'all remember the watch list when I said, yo, aim for price to take this liquidity? What did price do? It ran down to this liquidity. So first and foremost, let me just say, we were sniping the heck out of this up and down. Let me just take a second to say that was really good on every direction, for real. Every retracement we called it, every target we called it. But now here comes the very next retracement. I don't like what it just did here, because this setup, if you stare at my green lines, this is what we call an AMD, right? Which is accumulation. They manipulate you to the upside, and we're supposed to distribute to the downside. And what you would like to see when we come back to this consolidation, especially out of this sell model here, is that you really want to see it come under the consolidation, but it doesn't have to. I don't like when it doesn't, because then usually when it does what it's doing now, it ends up like kind of consolidating again. And so I'm just being careful about, like, all right, I wouldn't be surprised to see it consolidate again right in this area. And it's like almost like a no trade zone for me. I don't like the fact that we came to this liquidity. Now let's zoom back in. We ran this liquidity here, and we didn't immediately reject this bearish PD array. So what I would have wanted to see is pretty much this. After we meet this objective, this retracement here rejects on the lower half of this blue area and comes down hard again. Like, this is what I really want to see, come down hard again. When it plays out like this, I'm like, nah. Because what I want you to do now is view this from, and Q said the move up is suspect. Exactly. I agree, bro. Like, the move up is suspect. But then when I'm looking at this, I'm like, bro, from a bullish point of view, what the heck is this? And then I'm like, from a bearish point of view, what the heck is this? Whenever I have to say what the heck on both sides of the market, I'm like, oh yeah, nah, this ain't it. We're probably about to be in a range. You feel me? And like Will is saying, Q is saying, it's all suspect. You got relatively equal lows. You got this liquidity up here too. But it's like, if we were truly bearish, we probably would have rejected already. I don't even, and I told you this before, I don't like when I feel that price has more downside and we come to a fair value gap and we consolidate on it. Because when price is on a mission, I'm telling you right now, when price is on a mission, that thing just be going for real. So if I peep that, oh, I like this blue area, and then next thing you know, we get there and we consolidate on that blue area, I'm like, it might not use this blue area. I get real like, this might not work out. And so whenever you see price consolidate on a fair value gap that's in the middle of a price leg, be careful. It's the perfect place to ruin everybody's account. You know why? Because we're in between sentiment. Bullish people see this as, oh, we're sweeping to go run these highs. Bearish people see this as, oh, we about to use this fair value gap to go lower. But like, nobody really knows who's right yet. And so this middle area is the perfect place to destroy people's accounts. And you see they've already been doing it. It's been consolidation. And so I would just, like, to me, it's a no trade zone. If we didn't accelerate immediately, as I described to y'all, if we didn't accelerate immediately, I don't want it no more. Like, I don't want it. And so this is also how a person can like learn how to not pretty much, I would say this is how a person can learn how to like avoid chop, or like prepare for chop, so you don't get caught off guard. You're like, yo, why every play I take losing? Like, yo, because you're not peeping the signs, and these signs are not easy to see. It comes from experience, or just dealing with somebody who can put you onto experience. I got caught up on so many situations like this that I'm just putting y'all on, yo, don't get chopped up for me. And like Will said, if it's confusing, no trade. Real life. If it's confusing, no trade. Now the Nikkei, let's go to the Nikkei. We've been looking at this lately. Nikkei, we really wanted to see the same thing. This bearish fair value gap, if we were bearish, bro, this was very important. So seeing that we closed above it, bodies and all of that, bodies closed above this bearish fair value gap. It's like, man, I might not be ready. I might not be ready for that drop. This might have been the low, which is such a suspect low to me. It's such a suspect low to me. I'm not even gonna lie to y'all. I don't like what price did here. And so I don't like, I'm not a fan of what's going on with the Nikkei. But I will say, I'm just gonna ride the wave based on the invalidation of bullish tools. So I'm talking about, if I'm expecting downside, it might not come from a bearish PD array. It may come from the invalidation of bullish PD arrays. And the reason why I'm going into that type of mindset is because, what gem can we take from that? If I look at something that occurred in price action and it's suspect, like the fact that we bottomed here, we didn't run liquidity, we came right here, and what are we bouncing off? I don't see what the heck we could possibly be bouncing off at this moment. Like, this is not an order block. This is not nothing. I wouldn't even trade an order block in this context. This is a bad order block to me if I even try to call it that. So when I look at this low, I'm like, and no, I'm not sure if the Nikkei is related to Baba, but yeah, if I look at this, I'm like, it's suspect, and I'm looking at the rally up, and it's suspect too. Like, look at the daily, bro. This is very, very odd. But at the same time, it didn't validate the weekly SIBI we wanted. So I'm like, all right, I mean, what can I do besides to remain? I can't go bearish yet. I didn't take no shorts on this and nothing like that. There was no reason to, but I can't go bearish yet. So what I would do is I'd rather just wait for bullish stuff to start getting invalidated. A question in chat said, do I use the VIX as well? No, I don't use the VIX. The VIX is a broken product. Do research on the VIX and why it's a broken product now. And it has to do with the creation of these short dated expiration contracts that are in options. Because the VIX, when it was first being used and created and stuff, had to do with the fact that options contracts were typically at least 30 days out. So once they started making weeklies and 0 DTEs, same day expos and stuff, 1 day expos, it threw off the VIX. So like now when people, the VIX is pretty much going to show you fear in the market, or whenever the market is anxious about something. So let's say Jerome Powell is going to speak next month. Typically before, you're going to see people are getting 30-day out contracts, and that'll show you the fear in the market, and it was reliable as an indicator. But then now, Jerome Powell's gonna speak, ain't nobody getting puts until the day of, you know what I mean? Because we have the ability to just simply play 0 DTEs and everything. So the VIX is like a very broken product, and that's why if you noticed in 2022, it didn't go nearly as high as it did in previous recessions and bear markets and stuff. Not nearly as high because the VIX is just not what it used to be. So I don't use that for sentiment anymore, but definitely look into it and y'all gonna see what I mean. I look into why the VIX is different now than it was in the past. There's multiple articles on it, but yeah. So the 4-hour BTC, yeah. So like for example, what I mean is like this BTC is important. If price invalidates this BTC, then my eyes will start to open up on the Nikkei, especially if it invalidated with SIBIs. So if the 4 hours making SIBIs that invalidate the BTC, then I'm like, oh yeah, price may end up making this run to the downside that I'm looking for. But if it don't get that type of confirmation, I don't think I'm gonna play it long. I would just leave it alone, because as long as it's suspect to me, I don't want to be a part of it. So that's how it is. We got CL. I keep telling y'all, bro. CL is an example of something that is in what we call seek and destroy conditions. I'm telling you, it's a no trade zone. You can see the weekly, you can see the monthly, and y'all see what I mean, right? This is not something that, if you can't get direction from the higher time frame, I always suggest probably stay away from that ticker. I'm about to make an Instagram reel soon about this, and I'm gonna give y'all a little tip that I like for scalpers, right? I didn't even plan on saying this, but it's just reminding me about something. So I'm almost done too. So I'm gonna give y'all this tip real quick. So if you're a scalper, and especially for people who work long shifts and stuff that don't allow you to trade much, think about this. It would be best to scalp in the direction of the higher time frames. So I know everybody says, yo, scalping is a 7-minute play, 7 minutes or less. So you could just look at the 1 minute, the 30 second and catch a move and be out of there. Yes, absolutely. But do you realize that you should still do a top-down analysis if you're a scalper? Because so yeah, listen, I got so much gems for the mentorship that I'm not gonna ever share. Like, y'all understand the stuff I get for free is like so small to me compared to what I give the mentees, bro. Like, y'all good. It's always gonna be fair, trust me. And I'm saying this because I try to be fair to my mentees and not say like stuff that they paying for real. You feel what I'm saying? So, but this stuff is light. So like, look, let's say you had a ticker like freaking NQ or something, I don't know, and NQ's weekly is telling you that you're going higher, right? It's telling you that you're going higher. You got bullish targets. Okay, so the weekly told you that you're going higher. Now, when you do your top down and you notice that price traded into a BTC, right? Yeah, price traded into a BTC from the 4-hour time frame. Notice that the weekly told you that we're going higher, so you're trusting a 4-hour bullish PD array. this is an area that you're interested in price going bullish from. After this retracement, you're interested in it. So if I'm a scalper, I'm waiting on this to get hit. Now that it got hit, I'm looking at the 15-minute for a confirmation that it's going to use it. Let's say you like the confirmation that you're seeing after this. Let me show you. Let's say you see this. Boom. This is your first, not your first, but let's see, what is this? 11:30 a.m. Okay, cool. What was this? 10 a.m. All right, that's decent too. Anyways, I just want to make a really quick example. So look, like you got like a bullish fit value. Like, I like this. I think price is gonna run these highs. Do you realize that like running these highs is in the direction that the weekly is trying to send you in? It's in the direction that the 4 hour is trying to send you in. All right, so the expectation is not that you're just gonna sweep these highs, because it's in the direction of the higher time frame. So you're not expecting price to do this because we're already reacting to the 4 hour, right? We're already reacting to 4 hour, and the weekly already told you we're supposed to go higher. So this 4 hour fair value gap is supposed to send you all the way up here. You feel what I'm saying? So any moves to the upside are expected to hold because we have so much more room. And so the price action that will occur as we run these highs, for example, should be something that's worth making a move on. So if now that you're seeing the 15-minute, the 15-minute made a fair value gap and we're on the way to running those highs, this is like something that maybe you could, take a scalp on. I don't even know what this play looks like for real, but let's just say, like, look, if you were a scalper, this is a play you might have taken. This is a bullish order block, by the way. By definition, it will be this entire area. In my masterclass, I'll tell y'all why we would expect price to react exactly where it did in my masterclass versus expecting it to react down here. But whatever. So yeah, let's say you went long on, whatever in this candle. This is a scalp for you. How many minutes was this? This went from 12:05 to, let's just say, 12:14. In 9 minutes, you made from 565 to like 610. All right, so what is that? 45. Let's just round it to 50. You made a 50-point move in what I say 7 minutes. A 50-point move in 7 minutes, easy. Look how smooth. I'm on a 1 minute time frame. Look how smooth it was. This is such a smooth play, and that's what I mean. Like, if you scalp in the direction of a higher time frame, you catch the best plays. Like, I wouldn't scalp downside. Look at it, bro. Look what the downside is. It's choppy, it's nasty, but the upside is beautiful. And why do you expect us to blow past these highs? It's not just because it's equal highs. You're expected to blow past these highs because you don't believe that price is supposed to sweep it. It's supposed to run it. And when we run liquidity, we run it aggressively. That's why it's liquidity, right? Is there stop losses here? We want to destroy, we want to obliterate the people that are going short right there, obliterate them. All right, so you play that move and you expect it to go much higher because it's in the direction of the weekly, it's in the direction of the 4 hour. So even when you consolidate here, you might also still remain bullish because low key, we didn't get to the 4 hour destination yet. We didn't get to the 15-minute destination yet. Well, let's just talk 4 hour. So at that point, you might just stay bullish. And then any dips that come in the market, you might not even believe in them for real. Because until we get to that 4 hour target, any dips are just suspect to us. This is going to, it's like a little afternoon. Now any dips, you're like, it's probably gonna get bought up. I actually remember, I remember this play from Friday here. But yeah, bro. So hopefully, let me pause this real quick. Hopefully y'all catching my drift how a scalper should still do a top-down analysis, because when you understand where the higher time frame is going, all the moves that are expected to, for example, take highs, even if you're a breakout trader, you can expect this breakout to hold, right? Forget the people like me who's gonna try to go long on a retracement. If you're a breakout trader, why do you expect this breakout to hold? You expect this breakout to hold because it's in the direction of the higher time frame. Let's keep it simple. That's why this breakout held. So if you took this moment long, look, you may owe your money. You may owe your money if you're a breakout trader. All right, hopefully that's making sense to y'all, man. Hopefully that's making sense to y'all. Now let's finish up. Let's finish. So MCL, we talked about that. Gold. Gold, same vibe, man. Gold was a no trade zone. Now that we breaking out, how do we like to see breakouts out of consolidation? We want to see a fair value gap. So today's candle, I want this to flip green. If we're gonna still be bullish, this needs to be a fair value gap right here. So if today's candle looks like this, how, you know, if it ends up coming back into the range like this, that's not a good sign. And gold is still a no trade zone. Like if gold doesn't start trending, I just don't want to trade it. There's other tickers that's trending, so I don't want to trade it. If we're gonna break this consolidation for real, we need to break it with a fair value gap. All right. And for the masterclass, it's in the chat. Let me see. I thought I still had the copy and paste on my phone so I could write it in here. But if somebody has the link that I posted earlier, please, if y'all could please help out, post the link for the masterclass in the chat for me, please, y'all. That'll be very helpful. And then YouTube people, remember YouTube, click the link in the description. If you catch it, it's August 24th. All right, August 24th. So if you catch it in time, then yeah. And hey, thank you, Q. Appreciate you. Thank you, Will, as well, for posting that. So yeah, and you're welcome. So I think these are the last thing I'm saying. Yeah, the last thing I'm saying is you already know what we're kind of expecting to the upside on the S&P 500 as well as the NASDAQ. So if you guys remember many moons ago, before we had the correction in the market, and I believe we did go 10% down. So by definition, the market did have a correction. So before the correction, we were talking about this being a target for me on SPY, the 611 target on SPY. And this is a monthly target. So I know the daily may look like this, and it's like, I need to remember what the monthly looks like. The monthly has been super bullish. And so any like daily retracements, any weekly retracements, you know, you shouldn't be surprised when they get bought up, because they're really just retracements into, for example, order blocks or fair value gaps that's just going to take you back to where we're really trying to go. So if we indeed do continue as it looks like we're trying to continue, you already know I'm still aiming for that 611 on SPY. That's why it's on my chart still, because I understand that I got that from the monthly. You see this monthly candle that we have in August is OD. It's crazy though. I ain't gonna lie. This looks very disgusting. But you know, there's nothing to tell me that the monthly is reversing on me. Nah, the monthly is still doing what it's supposed to do, and it's the same thing for the QQQ. The monthly is doing what it's supposed to do. So for the Qs, I'm still looking at that 563. This was just a little correction. Price comes in. Mentees, y'all may know what this is. Y'all don't even gotta say it in the chat, but y'all would know why price would stop here. This is all price needed to do in order to, you know what I mean? Mentees is really technically all price needed to do. So it's not really that surprising that it stopped right here. But yeah, and you know, we'll see if we continue that 563. But that's the Q's target. So the monthly still looks ultra bullish. No reason to get, when you see this daily retracement, no reason to get like too bearish. You just have to pretty much see like, hey, when is price gonna start making its way back to the upside? And it looks like it is now, but we'll see if there's any. Please, Kia, we ain't learned that. If y'all see Kia in the chat, right, hammer candle, that is not what I'm talking about for my mentees. No, it is not doing no hammer candle. I do not do no candlestick patterns. I don't care nothing about no pattern from anywhere. It is not about a head, but she's trolling in the chat. It is not because of the hammer candle. No. I don't care. Never know hammer candle. And the hammer candle she's talking about, by the way, she's talking about the one from NASDAQ. She's talking about this one on the weekly. And people who trade that, look, it's playing out for y'all. So congratulations, it's doing this thing so far. But I would never ever take a play based on a freaking hammer candle, all right, or Morning Star, or Bear Flag, or Head and Shoulders, or whatever. And guess what? There's some fire traders who make money on that. So I'm not knocking nobody. At the end of the day, if you can manage your risk well, you're gonna be a successful trader. I don't care what you trade. If you learn how to manage risk, you'll be successful. I obviously have a bias towards the strategy I trade because I don't know any strategy that's as precise as it. My precision, yeah, I've seen it over months at a time now. It's pretty freaking accurate. Hey, it's very highly accurate. And so I don't know anything else that's that accurate. And so it's like, if I'm gonna base a risk management strategy around something, I'm gonna base it around the most precise strategy. So that way, I'm not only gonna be fire as a risk manager, but I'm gonna be fire as a technical analyst. So when you combine the two, you can manage risk well and you got ridiculous precision. I think my ceiling as a trader is higher than the ceiling of a pattern trader or a candlestick pattern trader or a strat trader, or I don't care what strategy you talk about. I think the ceiling for somebody who understands the two algo strategies I trade, which is SMC as well as Something else I won't reveal. When you combine that, I think my ceiling as a trader is higher than most. So that's my philosophy. But yeah, that's all I have. I'm gonna cut it here because I'm short on time. I'll stay around for a little bit for people that's on the Zoom, but for YouTube, I'm gonna cut it right here. So links in the description for not only the free community links in the description, but also for the masterclass that is on Saturday, August 24th at 11 a.m. Eastern. Everybody gets the recording. So if you sign up and you can't make it, you got work, you got a party to go to, whatever you want to do, the recording is getting sent to your email anyways. So it's all good. So definitely tap in with us. I'm going to tell you everything you ever possibly need to know about order blocks. You will never take a bad order block again. I promise you, it's going to be extremely helpful. And yeah, that's all she wrote.